I'm here in San Antonio for NAREIT's REITwise, our 2019 Law, Accounting, and Finance Conference. Joining me today is Daniel LeBey, partner of capital markets and mergers and acquisitions with Vinson Elkins. Daniel, thanks so much for joining us.
Glad to be here.
Now, there's not been a lot of movement on the REIT IPO front since Americold's offering in January of last year. What's holding up the market, and do you expect to see an uptick in activity over the next 12 months or so?
We've been sort of in a protracted period of sort of slowness within the REIT IPO space and generally within the REIT capital markets. Why is that? There are different theories. We've been in a rising interest rate environment. Some people think that creates headwinds in the REIT capital markets. That came to an end in December when the Fed finally put a pause on interest rate increases and have now confirmed that there won't be any more rate increases. In fact, we have an inverted yield curve now. What does that mean for REIT capital markets? I don't know. I think it's not a coincidence that after that happened, there was a small correction in the REIT, in the stock market generally in December, and we've seen more volatility in the market. Usually those sorts of factors lead to more capital markets activity in the REIT space, and in fact we've seen that. Not REIT IPO activity yet, but in the first quarter of 2019, the secondary offering activity really ramped up. I haven't seen the data on that yet. I don't think NAREIT has published that yet, but in our practice, we've completed 13 public offerings in the first quarter compared to 2 the first quarter of 2018. So, whether secondary offering activity is an indication of coming REIT IPO activity, I don't know that, but I think it's a good sign.
And in terms of REIT M&A activity, what types of deals do you expect to see over the next 12 to 18 months? And is there a particular sector you're expecting to be more active?
I do think that we will continue to see robust M&A activity, particularly if the REIT IPO market continues to be soft. There's about $1 trillion of private equity capital looking for acquisition opportunities, and so that will drive transaction activity within the sector. I think yesterday we saw an announcement of a large industrial portfolio deal. The day before that, there was an office REIT M&A deal, public M&A deal announced. I think it's hard to predict which sectors will see the most M&A activity. I think it will be across multiple sectors, and I think it'll continue both at the asset level for sure, and potentially also, at the corporate level. Industrial and office and multifamily, the sort of traditional asset classes. Healthcare is a dynamic and sort of hot class within the REIT universe. I think we could continue to see some consolidation there. There was one healthcare REIT M&A deal announced recently. So I think the M&A activity will continue. I don't think it'll be focused on just one sector. I can't predict which one we'll see the most activity, but I would expect that we would continue to see a good bit, particularly, as I say, if the REIT IPO market remains soft.
And finally, are there any issues or trends that may be flying a little bit under the radar in terms of the impact they could have on the sector in the near term?
Yeah, that's the interesting question. I think that one of the things we've seen in recent years that haven't had an effect on the real estate industry generally has been sort of the convergence between technology and real estate, and the intersection between the way people live and work has been changing, and that has an effect on the way real estate is developed, the way it's utilized, where it's located. Those are trends that are not going to go away.
Great. Daniel, thank you so much for joining us.
Yeah, thank you.
For more information on this and other REIT news and analysis, be sure to visit NAREIT's website, REIT.com.